Good morning. Welcome to Stock Market Today. It's Friday, March 15th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. And if you're on Stock Twits, I'm there as well, under the same handle. That's at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. You can sign up for a free email, follow along with this show, get daily stock ideas for you to consider in your inbox every day that the market's open before the market opens. Special thank you to See It Market and to StockCharts.com for broadcasting this show every day. Let's dive right in. U.S. equities were mostly weaker in Thursday's trading, but the selling was fairly limited. Small caps continued their recent bout of underperformance. Treasuries were weaker with the curve steepening. Dollar was stronger on the major crosses. Gold finished down 1.1%. Oil was higher, with WTI crude settling up 60 basis points. As we get to the desk this morning, S&P futures are up 40 basis points, knocking on the door of that 2820 level. And equities are on track for gains this week, rebounding from last week's pullback. Asian equities were higher overnight, with China up just over 1%. European markets are gaining as well. Treasuries are flat, as is the dollar relative to the major crosses. Gold is up 50 basis points, and WTI crude is adding on, up slightly 10 basis points. So here it is. Not a ton has changed. I wish that we could move these lines and update this chart a little bit more, but we can't. We have to trade the market that we're given. And right now, yesterday, stocks moved sideways below resistance. Will we break 2820? Futures are higher here this morning. Support still in the 2725 to 2750 zone, then near 2700. And for those of you who get my morning note, we have a good volume analysis in our chart today that shows volume supports these levels as strong support based on what's traded there over the past year. Resistance were there, 2800 to 2820. RSI remains in bullish ranges, and Chaikin money flow is bullish. So we're above a flat 200-day moving average. So for all intents and purposes, realistically, the long-term trend is flat. And here, I mean, we're looking at a year's worth of data, and we're essentially flat. How we got there, that was a different story, but we are essentially flat. And the 200-day moving average reflects that. It's a flat 200-day moving average. So for investors here, my thought is identify the very bullish and bullish stocks in leading industry groups, which are outperforming the market. And then when those stocks are oversold, you want to buy them, A, on a breakout through 2820 that's confirmed, or B, you want to buy them on a pullback to these support levels, like what we saw last week, right? Last week we were talking, the same message was clear last week. Use pullbacks to support to buy bullish and very bullish stocks, which have become oversold. That was a great strategy. I continue to think that's the strategy, but it's not the only game in town, right? Scenario analysis dictates you have to ask yourself, what are you going to do should we break out? I think you still want to play the same game. Leading stocks, leading industry groups, buy them when they're oversold, especially the ones that are outperforming the market, and in particular, the ones that are outperforming the market. The indicators line up favoring a breakout, but price is what pays, so we'll continue to watch that 2820 level. Still in bullish ranges on the RSI. Chaikin money flow is bullish. Market in a minute. Kind of the highlights from my note to Chaikin Analytics clients today. Stocks close flat to slightly lower. Quiet session fine. Small caps continue recent trend of underperformance. That's a sign of risk-taking in the market. And what's interesting is a lot of the risk themes that we look at are not screaming breakout. That doesn't necessarily mean we can't have a breakout. To me, what it tells me is if we break out, there's potentially a lot of catch-up money that could push it higher. FANG stocks continue to improve as a group. Growth reasserts a bullish trend relative to value, and futures do point to a higher open here today. So now let's look at the power bars for the major indices. Dow was the only one that was up yesterday, slightly, 7 basis points. 8 bullish or very bullish stocks, 4 bearish or very bearish stocks. S&P 500, call it flat, right? Down 5 basis points, 141 bulls to 60 bears. NASDAQ pushes over the 2-to-1 bull to bear ratio, although it was a slight underperformer yesterday. There's that small cap underperformance, down 42 bips yesterday. 436 bulls, 342 bears. We're watching. Bonds down tick, sending yields slightly higher according to the Chaikin Power Bar. Large cap stocks and small cap stocks are bullish. Major markets overall are mixed. And we're watching that 28.20 level. Now, our stock of the day comes to us from a group that we've liked a lot. We've heard us talk about it over and over again for the past few weeks, computer software and services. This is Momo Inc. Now, it is an ADR, an American Depository Receipt, meaning it's a foreign company listed here on U.S. exchanges, but we're going to evaluate it. 37.22 last, down 1.51% yesterday. Power gauge rating is very bullish due to strong earnings performance and very strong price volume activity. Financials and experts are middle of the road, but the 20 factors that fall into these four categories roll out with a very bullish rating. So very bullish stock, strong trend, strong industry group, type of name we want to own. But I'm just not there yet. I'm watching it. You can see this little yellow here means I have a note on it. I've been watching it. It's kind of compelling to me, but for me, I want to break out through this $38 level to give me confidence that an uptrend is really asserting itself here. If we notice, we're on that very bullish rating, but we're just beginning to outperform. Now, we've seen the intensity of underperformance improve since December, and now we're breaking through and beginning to outperform. Interesting that overbought, oversold indicator is now rounding higher after failing to become oversold. That tells me that there's some momentum strength to this here. And money flow is flat. It's been mixed. Fine. To me, I'd rather have the breakout through $38. That's how I'm playing this one. That's how I think you should be looking at it. I can't fault you for getting involved here, but you have to realize that this $38 level is some pretty solid resistance. So I like playing for the breakout through $38, all else being equal. I'm obviously watching Momo. As you can see, as I said, I have a note here on this one. I have it on a bullish watch list. I'm just not there yet. Keep an eye on Momo Inc., ticker symbol MOMO, as a potential long idea above $38. Sector tracker, movement of the major sectors over the last 5 days. Tech at the top of the list is compelling because it is the largest weight in the S&P 500. Real estate continues to do well. I think that's a yield play. Healthcare, seeing a bit of a rebound here on a relative basis. That's important. We've been cautious on healthcare. Want to give that one some time to play out. Financials doing well. As well as the comms. At the bottom of the list, industrials, discretionary, energy, and materials. We've been noting that energy and materials are seeing their downside relative momentum wane. I'm not there yet, but it's something to keep an eye on. These groups are not the layup underweights or bearish ideas that they had been over the past months, but the trend has not turned yet. Staples and utilities are in the middle of the road. It's interesting and important to note that all of the major groups are higher over the last 5 days. Now, industrials is a group that we've been focused on. We've wanted to use pullbacks in the XLI to get involved. Now, we've had it. Obviously, Boeing was an unforeseen event that's dragged the group down. But I think as a whole, XLI looks compelling in the mid-70s. Take a look at XLI for you ETF traders. Our industry in focus today, transport services. Over the past 6 months has underperformed the S&P 500 by 8.16%. And its power bar ratio, which measures future potential, is weak. 5 bullish or very bullish stocks, 8 bearish or very bearish stocks. And that gets it a rank of 16 of the 21 subsectors that we look at. It has moved up 3 slots over the past week, so seeing a bit of improvement, but just not there yet. Very bearish names in the group to avoid: Macquarie Infrastructure, ticker MIC, Alaska Air, ALK, and Kirby Corp, KEX. All have very bearish Chaikin power gauge ratings. So we're going to take a look at one here today for really just a good lesson on combining fundamental analysis with technical analysis. We have a very bearish stock here in Alaska Air. Weak trend, weak industry group, type of name we know at the very least we want to be avoiding and potentially want to look for opportunities on the bearish side. So the power gauge rating being very bearish tells us that for the most part, the fundamentals are bearish. Now let's walk through our process. Very bearish stock. Look at the intensity of underperformance really picking up of late. Bearish money flow below the long-term trend line, and look at this level here at $58. If this doesn't scream resistance, I don't know what does. This is textbook, right? When I was preparing for the CMT exams and we started looking at classical technical analysis, support and resistance, this is resistance. right? What it is it's former support that once broken now becomes resistance. A lot of resistance here at the $58 level. I think that as long as Alaska Air is below $58, you want to avoid it. And should it become overbought while remaining below that level, you could potentially look to open bearish trades via options markets, however you express that view. All else being equal, of course. But this is certainly the type of name we want to avoid. And for those of you who trade to the bearish side, perhaps you want to look for opportunities to open. We're not there yet. I want it when this indicator is closer to overbought. Gainers and losers from the S&P 500 yesterday. Drillquip, FTI, no real news. Stock up nearly 5%. Positive sell-side comments sent Lam Research higher by more than 3.5%. GE's updated guidance sent that stock higher by 2.8%. Northern Trust caught an upgrade, higher by 2.75%. Schwab updated their monthly metrics. Ticker symbol SCHW was up 2% on the back of that news. Dollar General's guidance sent that stock lower by 7.5%. LTHM, this has been a volatile one all over the map. Relatively newer side, so we don't have a rating on it yet. Stock was down 4.5% yesterday. Take-Two down 3.75% as Sony came out and denied bid rumors. NKTR, another volatile name. We've seen this one on both sides of the board over the past few months, down 3.5%. And L Brands, LB, down 3.14%. No real news to drive the action in those two stocks. So let's dive right in. What am I talking about in my note today? It's Friday, right? It's when I look at the key themes and relationships in the market to get a gauge of investor risk appetite and sentiment. FANG stocks are improving as a group. This is an index that I've built of Facebook, Amazon, Apple, Netflix, and Google, the quote-unquote market generals. Now, obviously, there are more generals than this, and these are not the most important names in the market, but this is certainly a subset of the most important names in the market. And you can see that while they were doing well throughout 2017 and the first half of 2018, the market did well as also. And then when these names rolled over, the market was rolling over, and now they're starting to reassert to the upside. They've taken out the rising 200-day moving average. So now what we're looking for is confirmation from RSI. I have this zone highlighted here because notice how RSI has not been able to become overbought as the group rallies. So it's something we're keeping an eye on. But to the extent that the FANG names can continue to move higher, notice they've started to take out their interim highs. I think that that's bullish for the market in general. You know, trend reasserting to the upside. Odds favor us at least retesting these highs up here for this custom index that I've built. Growth leading value is another theme that we've been highlighting. This is Russell 3000 growth relative to Russell 3000 value, and you can see a nice steady uptrend again throughout most of 2017 and 18. And now that uptrend is beginning to reassert itself. It's above a rising 200-day moving average. To me, that increases the odds that growth is going to continue to outperform value. So as you're thinking about how you want to set up your portfolio, if you're in it, have to choose between a growth name and a value name, all else being equal, let's ride that growth trend. And if you look at the RSI for this ratio, you can see series of higher lows as it begins to shift into bullish ranges. Now, we'd love to see an overbought condition on a strong move higher to confirm, but signs are pointing in the right direction, favor growth over value. And small caps are underperforming once again. This is one we've looked at a lot. This chart should look very familiar to our readers and to those of you who listen in and watch this show every day. IWM relative to the SPYs tried to break through this level, couldn't get there, now retreating below the declining 200-day moving average. RSI of the ratio moving back towards bearish ranges, and you can see on an absolute basis, IWM has failed at resistance. So if we roll all this up, what's an interesting thing to look at? What's an interesting way to express our views? Russell 1000 Growth ETF, right? Growth over value, large over small. IWF has a bullish Chaikin Power Gauge ETF rating, been outperforming the market since late January, rounding out of an oversold position with bullish money flow. In the process of breaking through, I like IWF to play the growth over value, large over small theme on a break of 150. For those of you who trade ETFs or invest in ETFs, this is an interesting one I think you should be looking at. So that's it for today. Get daily stock ideas for free, ChaikinAnalytics.com/today. I hope you all have a great weekend. I'll be back on Monday.